Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed right here on the Nasdaq Stock Exchange. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us on this Monday afternoon, we have Mike Sokoll, who's a senior managing director on Nasdaq's market intelligence desk, for an update on Nasdaq 100 levels as Apple ramps up into the expected 5G iPhone launch later this week. Facebook, Amazon, Netflix, Alphabet, Microsoft, all super strong in this session. Mike, it's great to see you again. Welcome back to Trade Talks. And we have to talk about that Nasdaq 100 performance. You have a couple of interesting charts for us to take a look at.
Yeah, so one of the things that caught my eye today is when I looked at the Nasdaq 100, it's up 450 points. And, if you were to tell me that an index is up 450 and another one is up, 300, guess which one? I would have said the Dow is up the highest. But today, Nasdaq is up, 450 points. Dow is 300 and change. So you actually have a greater point differential between the Nasdaq 100 and the Dow. So I took a quick look at some stats going back in time. So from 2010 to 2020, basically from the first 5 years of that, you never had a situation where the Nasdaq 100 was up more in points than the Dow. 16 through 20, we've had about a mid-teens. You have 15 or so instances a year where that happens. What really caught my eye is you only in the past year, since March of 2020, where there's been 7 occurrences where the Nasdaq 100 is up 100 points more than the Dow. That's only happened 7 times, all of which were in 2020, with one exception. There was one day in 2017. So, obviously percentage-wise, the Nasdaq 100 is outperforming for many of the reasons I'm sure you've covered over the past few months.
Yeah, it's really interesting. I mean, it's broad-based technology too. I mean, of course, you have, the top 5 or 6 that we always mention, but it's pretty much so across the board. Of course, fueled by what's happening in Apple. So, the semis and some of the other suppliers are certainly going to catch a bid. But it's really interesting, Mike. As much as we talk about what's happening in big tech, what's happening in the White House, what's happening with COVID-19, by the way, earnings kicks off this week, and it's going to be, this next 3 to 4 weeks, add the election into that, is going to be quite busy for you guys on the desk. What's your thoughts around earnings in general?
Yeah, so I mean, the catalysts for the market, in my view, are the fiscal stimulus, which we saw a fascinating view of that last week, because you had a 500-point round trip based on just one day worth of is fiscal stimulus happening or not, and so that's a main catalyst. And of course, why didn't the market go down further? Well, you have Fed support, but and then the election, of course. But then the next thing that folks are going to be looking to is earnings, because as you mentioned, some of the big banks are going to start reporting this week. We're going into earnings season. And then what happens is people start to look at the guidance, because third quarter and fourth quarter this year, the comps are supposed to be negative, over 20%. I mean, very large declines in earnings. But once you get into first quarter of 21, you're expecting positive comps versus 2020, which admittedly is a bad year. So if, for example, you don't get some decent guidance, people start to question that earnings rebound thesis. So I think it's an important time, because the market tends to discount out about 6 months. So it'd be very important, not so much what the results are. I think some of that negativity might be baked in, but what people are saying about the future.
It's really interesting. And I also think the what we're dealing with this particular quarter in 2020 is the challenge of giving guidance, right? Because there's a lot of uncertainty around election results, and we really haven't gotten into the meat of policy, right? So we don't even know what tax policy is going to look like. President Trump really hasn't been that vocal on it, with the exception of his early years in the administration. I don't recall him talking about tax policy going into if should he get a second term. We know, we see what Biden is bringing to the table, but if you think about it, there really has not been an argument around core policy. So it makes it really difficult for business leaders to make some of these decisions when you're giving guidance, when it's very unclear what Q1 could possibly look like.
Yeah, I couldn't agree more with you. I think of late anyway, there's been rather little about policy and how folks should make decisions, at least in terms of the broader markets reacting. I think it's reacting to the likelihood of a more certain outcome to the election rather than the policy. So if you had a dragged out 3-month period in the courts where no one knew who won, that would be bad for stocks, all of that uncertainty. Now that Biden is leading in the polls, I don't know so much that the market is saying, it's happy about any one particular policy that either candidate has, but at least it likes the fact that you might have a greater chance of a certain outcome on election day.
All right, Mike, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at NASDAQ.